News that Warren Buffett's company, Berkshire Hathaway, has invested over $1 billion in Apple has prompted questions about both buyer and target. Has Berkshire changed its attitude towards technology? And is Apple a value stock? Here are the answers: no and no. This is a tiny transaction for both companies. It is 0.2% of Apple's market cap and 0.22% of Berkshire's asset value. So it is a bit rich to suggest that this is more than a symbolic change for either party. Even putting that aside, there's plenty of tech in the Berkshire portfolio. IBM is the most famous tech bet in the portfolio, and a big money loser. Berkshire's book is crammed with companies that depend on technology to keep the profits coming: General Electric, Visa, Verizon, Liberty Global. Berkshire cares not what sector a company is in. It cares about barriers to competition that beget predictable, rising cash flows. So it tilts towards big consumer brands or insurance or utilities. But this is just a tilt. Nor is Berkshire rigid about owning only value stocks, which is to say those that are inexpensive relative to their earnings. Berkshire paid a 50% premium and a distinctly non-value price of 20 times earnings for its biggest purchase ever, Burlington Northern Railroad. Still, Berkshire owns plenty of value stocks. Is Apple now one of them? Well, it trades at a cheap 11 times earnings and pays a dividend of over 2%. That makes it look a lot like Verizon, say, or Walmart, which are undoubtedly value stocks and which Berkshire owns. And Apple has a safety net in the form of $153 billion of net cash on its balance sheet, which should keep that dividend safe for some time. But there is more to value than a low PE ratio. A value stock is cheap and has a base level of future earnings that are, to a significant degree, foreseeable. Verizon and Walmart may not grow much, but a radical drop-off in profit seems quite unlikely, given their big asset bases and indispensable products. Apple is not like this. The company likes to point out its billion devices currently in active use. Bulls on the shares like to assume that most of those will renew their subscription with Apple by buying Apple products again, or that Apple has a next big thing coming to rekindle growth. Both claims may be true, but assessing them is a matter of foreseeing how mobile technology will evolve in the near future. That is exactly the kind of prediction that a solid stock like Verizon or Walmart would never ask you to make. Berkshire may be wise to own Apple, but not if they think it's a value stock. Rob Armstrong, Lex.